The Chinese smartphone maker Xiaomi has seen its shares list in Hong Kong at the low end of expectations, and the stock fell almost 6% before recovering. That launch price gave it a market value at about $50 billion, becoming the world's third largest listed maker of mobile devices behind Apple and Samsung. Dr. Richard Windsor joins us now from Radio Free Mobile. Richard, the IPO, I think it's the biggest tech listing since 2014. How would you have described the listing itself?
Well, obviously the listing was a disappointment, particularly if you look at how it came. It came at the bottom end of the range, obviously, so demand was obviously a bit slack, and then it didn't manage to, improve on its first day of trading, even with undoubtedly institutional support. So one has to scratch one's head a little bit, particularly around, what is the value, what is the real valuation of this company, and how is the market going to price it?
Does this tell us anything about the general environment, or is it a Xiaomi-specific event?
I think there's two things. I think certainly the fact that the smartphone market is now slowing down, pretty much as one expected, to be honest with you, has not helped. But at the end of the day, it really comes down to what are the fundamentals of this company and how much is it really worth. And I think that is what the message that the market is sending today, is that perhaps even 50 billion is perhaps a tad too much.
One of the interesting things you spoke about on one of your papers late last week, you were comparing this to the Razer. Explain more about that and what we can learn from that when set against the Xiaomi IPO.
Yes, now Razer priced very nicely. It priced at around about 10 times revenues. Now, what Razer, for your viewers who don't know Razer is the company that makes those high-end PC peripherals for gamers and gaming PCs. 10 times revenues for a PC maker is extremely expensive. But again, it was pushed quite hard and it was attractive and it was a good story. But subsequently, it priced at the top of the range and it did well on its first day. But in the last 8 months or so, it's lost nearly 60% of its value. And that is a warning sign for companies that come to the market, I think, that are, priced more on or sold on a story rather than the actual fundamentals. And there is a danger that Xiaomi may have fallen into the same trap, because when I run the fundamental valuation of Xiaomi, I get a lot less than even where it is today.
Well, of course, Xiaomi doesn't just make smartphones, does it? I know it's a lion's share of its business, but it also does other things, and computer peripheries and so forth, home gadgets and whatever. Do you see this company as being rated as a smartphone maker, or should it be rated differently, bearing in mind its other interests?
Well, that's the problem, you see. It's actually being rated as a dominant internet company in China, and in fact, it's even more expensive than one of those. So the way I looked at it was, okay, let's break it up into its pieces. Let's take the smartphone piece. What's that worth? Do a comparison against Apple. Let's take the internet piece, compare that against, say, Baidu or Tencent or Alibaba, which is a fair comparison. And then all of these investments that it has in all these other little makers of bits and pieces. We valued the equity, the private. The PE portfolio that it has of all these little investments, and when we added all that up, best case scenario we can come up with is about $42.6 billion.
Yeah. Just one final question: can Xiaomi survive a trade war? We haven't heard conclusively yet what China is going to say in terms of retaliation for the tariffs slapped on last week by Donald Trump's government. But can it survive a trade war, do you think?
Well, actually, I think it can, because it has hardly any turnover coming from the United States at the moment. So I think what you would see, the impact on Xiaomi might be opportunity costs, but in terms of, suddenly seeing a decline in revenues because US business disappears, that's very unlikely to happen.
Okay, all right, Richard, look, it's a pleasure. Thanks indeed very much for your time. Dr. Richard Windsor joining us there from Radio Free Mobile. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.